Tim, thank you so much for joining us.
Great to be here. Thank you.
So let's start with what's happening in the VC market and the landscape that we are seeing globally. So what can you tell us about what you're seeing in terms of trends in VC landscape?
Well, I tell you, it's a fascinating time with everything that we're seeing. Certainly, if you think about the run-up in prices, it always has an effect. You know, we have this extraordinarily reflexive asset class in crypto. As soon as prices start going down, everybody pulls back. As soon as prices start going up, everybody gets involved. And it's arguably one of the most reflexive asset classes in the world. So what that means is we're already talking. We're only a week or two away from Trump's victory. That's clearly had a huge run-up in crypto prices. Now we're already talking about the knock-on effect that will have on the VC opportunity in the space. Now, I think the really important thing to do is to, as a VC investor, where you're thinking a lot more long-term, and we do everything from very short to very long-term, is not to get caught up in that. There is a broader narrative on what are the opportunities behind that. So I think one interesting element that we're looking at is there's a cohort of companies that raised during the last run-up, and two things could have happened with those companies. Either A, they happened to raise enough to get through the last couple of years, and the question is, do they have a commercial story? And then you've got the other ones who've actually maybe didn't raise so much, but they've got a commercial, they've got traction, they've been able to continue. And I think it's the latter category that we find really interesting. Now, what's also interesting on the early stages, there are a huge number of projects coming to market. And that never really stopped, interestingly. Even during sort of the lower parts of this last cycle, there's always this energy, this interest in really getting involved in the space and solving problems. I think now it's time to look at those projects and really assess, do they have a commercial story? I think we've seen several cycles in this space, and that's the one thing that keeps coming back. Do you have traction to get to revenue?
So on that point, Tim, I mean, the companies you mentioned that you like that have generating revenue or they have a story, any sectors in particular that you like within that vertical of companies that are generating revenue?
Yeah, look, we're very much an infrastructure-focused company. We like the picks and shovels play, and we really like. There's actually this interesting bifurcation of classic centralized infrastructure, which we foundationally believe is essential. We don't really believe in that sort of everything's going to be decentralized. Like that's just not how the future is going to pan out. It's somewhere in the middle, and then you've got this notion of DePIN, which we're hearing about, the decentralized physical networks or physical infrastructure. And we like both of those directions, as long as the people behind the teams behind them have been through cycles. This is an important thing for us that we've learned. You can have really very well thought through ideas if you haven't been through cycles and you haven't experienced when it can go wrong, especially when it's infrastructure, because infrastructure really needs to stay resilient. Then we tend to shy away from them. And people will go and make the mistakes that you make when you're building infrastructure. We need to focus on those teams and those projects which feel like they've got kind of that weight and that traction and institutional clients of interest. The retail game, everyone's here in retail, and that's why we've had another run-up. We need to see the institutions coming. And so anything for us that really drives convergence of institutional players, the net new allocation of risk capital into this space, that's what we're really interested in.
So you mentioned something really interesting for me, that the future doesn't look like we're going to have everything decentralized. It's going to be something in the middle. Why do you think that?
Well, I've coined this term XFi because we love to talk. We love to give things a term. You know, CFi and there's DeFi and TradFi and all these FIs that we talk about. And really, at any given time, there's just XFi. There's financial services exists, has for hundreds of years. It will continue to exist. And at any given point, there's a whole set of tools that we can use. And what we're now beginning to see, which I think is really encouraging, is these new tools that have come through this DeFi world. They're starting to encroach their way into CFi and come together. That connectivity point, that convergence point, for us is where value will crystallize. And I think, you know, the idea of the echo chamber that we find ourselves in for capital, like it doesn't really help us as a crypto economy to be recycling capital from the same people who've been in it, you know, sometimes for 10 years or more, like us. You got to get the net new money in, and I think net new money will need to see some level of resilience, some regulation, some significant capital backing, and we don't really necessarily see that in a lot of DeFi projects. So that's why we think it's so essential that they meet in the middle somewhere. and you get that net new sovereign wealth fund dollar, or that insurance company dollar, pension fund dollar, credit hedge fund dollar, or the family office dollar.
In terms of fresh capital.
In terms of fresh capital, because without that fresh capital, we're just staking and restaking and re-leveraging, and that doesn't really make for a functioning market that can grow.
But on that point, right, I get it that you mentioned you need more regulatory clarity, you need obviously some existing capital for more capital to come in. But what do you think could be the main catalyst? You think some of the recent events that happened in the U.S. could be the main catalyst? Because you could argue regulatory clarity, by and large, in many countries we have it. Infrastructure, we have it. What could be the catalyst that brings about this billions of dollars more from the players you mentioned?
It's interesting. If you look over the last decade or so, when I got involved in this space about a decade ago, we were talking about whether the technology was resilient. Will it work and will it scale? And I think now we can say with a lot of certainty that it has scaled. It is resilient. It can be used globally, and there's trillions of dollars of assets are locked up in blockchain. So let's not debate whether or not the technology works. Then, to your point, it was, but we're going to need some sort of harmonized regulation across the world. And we're seeing, I think you're right, we're seeing enough of that now to feel confident that in every major jurisdiction in the world, and crucially, the most important one, the biggest one of all, the big kahuna, the US market, it's still the biggest capital market in the world by an order of magnitude. Now, I think that is a catalyst. And for us, and I think a lot of projects in this space, for the last few years, the US was persona non grata. We wouldn't go there. We wouldn't even consider setting up a business there. I think now the chatter in our industry is, how quickly can you move in? Because if you see the wirehouses, the UBSs, the Morgan Stanleys, the thundering herd, as they call it, coming into the space, that's net new wealth management capital coming in. That feels like the capital that'll allow us to catalyze and grow. So I think that US catalyst is important. But I think we're going to need to see a little bit of innovation. I think we're still a little bit stuck, in this tautology of, can decentralized truly work with centralized? And the answer is it's going to, and they'll find a way. But we've got some ways to go. So
you just mentioned the fact that we're seeing more appetite and more, investments from institutional investors. So when you look at institutional investors and family offices as well, in your opinion, what do they need to see in the next 5 years in order to put and have more faith in the crypto landscape overall?
Well, I think in a way, the firing gun was started when we finally saw the ETFs being approved last year. We've talked an awful lot about that.
It's a major milestone.
Huge milestone. And I think it's often, you have that Bill Gates quote that you overestimate in the short run and you underestimate in the long run. And I do think that's true of this ETF moment. I think we're going to underestimate the knock-on effects that can have in the growth of a market. And what I mean by that is, it's great that we've got BUIDL. We've got BlackRock, biggest asset manager in the world, who's created an on-chain capability for money market funds. That's great news, and we need to see more of that. And I think that's one of the things that the institutional investors will react to, more large institutions like that coming in. But the really interesting part is what happens next. Using ETFs as collateral when I want to build a capital-efficient market, when I want leverage in the system. And I think one of the things that's truly one of the blockers right now for this ecosystem is there's a huge dearth of leverage. I know you had earlier on the show the CEO of Deribit. You need a large functioning derivatives market for any market to be truly efficient. You have spot, you're going to have your derivatives, you have that hedging activity. You anticipate, as in most traditional markets, that the derivatives market ends up being bigger than the spot market. That's a classic sort of route that's played out over the last few decades. We expect to see that here, but to get there, we need that leverage to come into the system. So we think if we start to see the ability for financial institutions and hedge funds and family offices and insurance companies to use the routes they're used to then be able to either apply their capital and get that rate of return by being leveraged, or for the big hedge funds who all want to trade this market, and in many cases are, but they're not getting that leverage from their traditional prime brokers. Yep. We need to break that logjam. Hopefully we'll be able to get rid of some of these blockers, as you mentioned. Thank you very much for being with us. That was Tim Grant, the CEO of Deus X Capital. Thanks for being with us, Tim, today. Thank you.